This week was dominated by politics and global bond markets, actually, but we really haven't seen a ton of changes in our U.S. economy. Over the weekend and early this week, the markets reacted pretty strongly to the tensions surrounding Greenland, and there was a sharp sell off in Japanese government bonds. And basically, as the week went on, those global fears kind of calmed down a little bit. And Japan's finance minister even came out and said their situation isn't as bad as headlines are making it seem. And U.S. officials did point out that foreign investment in U.S. bonds are still very strong. And as those things kind of settled, mortgage bonds did recover some ground and mortgage rate sheets improved a bit. They're better than yesterday, but still not back to the best levels we saw earlier this month. And on the political side, President Trump kind of backed off those tariff threats toward Europe, saying that there is a framework for a deal to Greenland again. And that did help markets initially, but the details were pretty limited, and the markets are still cautious about that. Here's why that matters for mortgage rates. Tariffs tend to act like a one-time price increase. It's not permanent inflation, but they can keep inflation readings higher for a while, which does make investors nervous about rates, since mortgage rates do move with inflation. And speaking of inflation, we did finally get some delayed PCE numbers, which is the Fed's favorite measure of inflation. And those numbers were actually pretty mild and were helped by lower housing costs. Inflation looked better in October and then ticked slightly higher in November, but mostly because of how the comparison math works. Last year's number was very low. And the important part is this. When we look at recent trends, inflation does appear to be cooling, especially on the housing side, and that keeps the door open for rate cuts later this year, even if nothing happens immediately. And on the labor front, jobless claims actually stayed pretty low, and that just continues to tell us that companies aren't firing aggressively, but hiring obviously isn't strong either. And a lot of people who lose their jobs are turning to gig work, like driving for Uber, because unemployment benefits don't cover their bills. And just because people aren't unemployed doesn't mean they are gainfully employed. And there are plenty of people still unemployed who have just run out of benefits and can't continue to apply. And again, this is a low hiring, low firing job market. But mortgage applications showed purchase activity stronger than last year, and refi demand has really surged as more homeowners sit on higher rate loans. And if you want tools and resources that you can white label to add value to your sphere and help them make decisions surrounding refis, just say the word. Realtor confidence also improved. Agents are more optimistic that early 2026 will be better than last year. And we've seen solid buyer activity, pretty low cancellations, and homes, even though they are taking a bit longer to sell, it is closer to normal. And this does kind of vary a lot depending on the market, so I take these nationwide numbers with a grain of salt. And one more policy thing worth noting, the administration did sign an order aimed at limiting large Wall Street investors' access to federally backed financing for single-family homes. This doesn't ban rentals or force investors to sell homes. It mainly just restricts government-supported financing going forward. And the idea is to prioritize owner-occupied buyers, people that are buying their primary residence. And it seems like something that was done probably to make the public feel good, but probably won't make much of a difference in reality. And finally, markets are watching who's going to be named the next Fed chair. President Trump spoke positively about Rick Rieder, an executive at BlackRock, while Kevin Warsh remains the front runner, at least according to those prediction markets online. Treasury Secretary Scott Bessent did say a decision is coming next week, and if it's announced before the Fed meeting, that announcement on the new Fed chair could matter a whole lot more than the Fed's own press conference. But next week, we'll get some inflation numbers, that Fed meeting, and maybe a Fed chair announcement, all of which could move the market. But that's it for this week. I'll see you next Friday.